The United States has been applying significant pressure on Saudi Arabia to distance itself from China and other BRICS nations due to geopolitical and economic concerns. The U.S. aims to prevent the transfer of critical technology, infrastructure, and data to China, which could potentially undermine American economic interests. However, Saudi Arabia's recent actions, including the signing of $50 billion worth of memorandums of understanding with Chinese financial institutions, indicate a clear inclination towards strengthening ties with China. This move is part of Saudi Arabia's broader strategy to diversify its economic partnerships and reduce its reliance on oil in line with its Vision 2030 initiative. The agreements with Chinese banks are designed to boost two-way capital flows, encompassing both debt and equity investments, thereby facilitating greater economic integration between the two nations. Saudi Arabia's pivot towards China is also reflected in its increased investments in Chinese markets. In 2023, Gulf Fund's investments in China surged to $2.3 billion, up from about $100 million the previous year. This significant increase underscores the growing economic interdependence between the Gulf region and China. Despite U.S. concerns, the strategic alignment with China is further evidenced by Saudi Aramco's major deals to expand its investment, reinforcing its position as a key crude supplier. These deals, the largest since President Xi Jinping's visit to Saudi Arabia, aim to promote oil trade in yuan, potentially challenging the U.S. dollar's dominance in global oil markets. Despite U.S. Secretary of State Antony Blinken's assertion that Washington is not asking Saudi Arabia to choose between the U.S. and China, the kingdom's actions indicate a clear preference for deepening its economic ties with China. This trend highlights Saudi Arabia's pragmatic approach to international relations, seeking opportunities where they arise without being constrained by traditional alliances. In 2023, the trade volume between China and Saudi Arabia was significant, reflecting the deepening economic ties between the two nations. In the first quarter of 2023, their bilateral trade reached approximately $24.3 billion, comprising $13.7 billion in Saudi exports to China, primarily crude oil, and $10.7 billion in Chinese imports, mainly electronic goods. Over the entire year, China imported goods worth $64.36 billion from Saudi Arabia. The trade relationship continued to flourish in 2024. In May alone, China's exports to Saudi Arabia increased by 11.8% compared to the same period the previous year, while imports rose by 3.51%. This ongoing growth underscores the robust nature of their economic partnership, with significant cooperation in areas like technology, logistics, and manufacturing. Before delving into the topic of Saudi Arabia and China trading in their local currencies instead of the US dollar, let's take a quick pause. If you enjoy our content, please hit the like button and subscribe to X-Rainer. Your thoughts and feedback in the comments help us grow. Thank you. Use of local currency in trade. China and Saudi Arabia have recently intensified their efforts to reduce reliance on the US dollar in international trade through a significant currency swap agreement. Valued at approximately $7 billion, this deal allows the two nations to settle trade transactions using their local currencies, the Chinese yuan and the Saudi riyal. The agreement, which will be in place for 3 years with the possibility of extension, enables up to 50 billion yuan or 26 billion rials to be traded directly without converting to US dollars. This move is part of a broader strategy known as de-dollarization, aimed at reducing dependence on the US dollar in global trade. China has been actively promoting the internationalization of the yuan, and this agreement with Saudi Arabia is a step towards that goal. The swap deal is particularly symbolic given Saudi Arabia's status as the world's largest oil exporter and China's position as the largest energy consumer. The agreement is also seen as part of the broader financial partnership between the two countries, which has been growing stronger in recent years. This partnership is expected to support Saudi Arabia's Vision 2030, an ambitious plan to diversify its economy away from oil dependency by expanding into sectors such as technology and tourism. History of China and Saudi Arabia. Relationship historical records indicate limited interactions between ancient Chinese dynasties and the Arabian Peninsula, primarily through the Silk Road. Formal diplomatic relations between Saudi Arabia and China were established on July 21, 1990. This move marked the beginning of a significant shift in Saudi Arabia's foreign policy, diversifying its international alliances beyond its traditional Western partners. The 1990s saw a gradual increase in trade volumes, with initial exchanges focused on basic commodities. By the early 2000s, bilateral trade had expanded rapidly. In 2004, the trade volume between the two countries was approximately $3 billion. This figure soared to $25.4 billion by 2008, reflecting a compound annual growth rate of nearly 40%. The relationship continued to strengthen in the 2010s, driven by China's growing demand for energy. By 2015, China had become Saudi Arabia's largest trading partner. Trade between China and Saudi Arabia reached $42.36 billion in 2018, with Saudi Arabia supplying 12% of China's crude oil imports. The economic partnership deepened further, with trade volume hitting $87.3 billion to 21. In the first quarter of 2023 alone, trade reached $24.3 billion, including $13.7 billion in Saudi exports to China and $10.7 billion in Chinese imports. The cornerstone of Sino-Saudi economic relations has been the energy sector. Saudi Aramco has engaged in multiple joint ventures with Chinese firms, including refineries and petrochemical plants. In 2019, Saudi Aramco signed a $10 billion deal to build a refining and petrochemical complex in China. Saudi Arabia is a key partner in China's Belt and Road Initiative, BRI, leading to significant Chinese investments in Saudi infrastructure, logistics, and manufacturing sectors. The Red Sea. Industrial aluminium company's $1.01 billion investment in Saudi Arabia is a notable example of this growing partnership. The political relationship between China and Saudi Arabia has been marked by high-level exchanges. Chinese President Xi Jinping's visit to Saudi Arabia in December 2022 resulted in the signing of 35 agreements worth $50 billion across various sectors. China has also played a mediating role in regional politics, exemplified by its facilitation of the Saudi-Iran diplomatic rapprochement in 2023, highlighting China's growing influence in the Middle East. There has been a steady increase in cultural exchanges, including educational scholarships and tourism. Thousands of Saudi students are studying in China, and there has been a push to attract Chinese tourists to Saudi Arabia as part of its Vision 2030 strategy. Cooperation in media and technology is also notable, with Chinese tech giants like Huawei playing a significant role in Saudi Arabia's digital transformation. This marks the end of the petrodollar agreement era. In addition to the New Deal, Saudi Arabia has also disappointed the U.S. by ending the petrodollar agreement that had been in place for 50 years. Established in 1974, this agreement required Saudi Arabia to sell its oil exclusively in U.S. dollars and invest the surplus oil revenues in U.S. Treasury bonds. In return, the U.S. provided military support and economic aid to Saudi Arabia. The expiration of this agreement on June 9, 2024, now allows Saudi Arabia to sell oil in multiple currencies, including the Chinese yuan, euros, yen, and even digital currencies. This shift is significant because it could potentially weaken the U.S. dollar's dominance as the world's primary reserve currency, a status bolstered by the petrodollar system. The decline in global demand for the dollar could lead to higher inflation and interest rates in the U.S., as well as a weaker bond market. The end of the petrodollar agreement reflects broader shifts in global energy markets and geopolitical dynamics, with emerging economies gaining more influence and the increasing adoption of alternative energy sources reducing reliance on oil. That's all for this video. Thank you for watching. We sincerely appreciate your time today. If our content resonated with you or sparked inspiration, please consider expressing your support by liking it and subscribing to stay connected with our community. Your support holds immense value for us. You can watch another video from our channel, which is now on the screen. Thank you for watching.